Great and beautiful morning, afternoon, and evening to you all, wherever you are joining me at this hour. Welcome to 260 edition of Investdata Trading Academy live with Ambrose. I will tell that the global market, as we speak, remains struggling mixed after we saw a strong rebound last week Friday. That some of the market also extended that positive trend or outing this morning. But I'll tell you, majority of this market are missed. But the good thing is that there are factors driving all this. You know that last week we saw about 30 central banks across the globe hiking their rates, especially from central bank, Reserve Bank of Australia. We saw that of Fed, which is US, and ECB, which is the European Central Bank. They all kind of hiked their rate, 25 basic points. I can see across, which only 50 from ECB. But these also have kind of sent some of panic or drive volatility that we saw that week. And as we speak, because of the recent rate hike again in EU, which is the European Trust Bank, I see that fear of recession has started manifesting also in Germany. But we know already that in US, the indicators they have shown that US is already in recession, whether it's mine or not mine, according to the language used, is recession already we have seen. And these are what is driving what the global fear of recession. But because these are the major, big countries across the globe, especially in the West. But if you look at the general market as we speak now, today focus has changed from what we saw last week. But if you look at the Asia market, I will tell you, Asia market also extended the bullish trend. Apart from Japan, that was saw this award that is a bit in the red. But most of the Asia market, indicators are in green. Because of focus are shifting from what happened last week about rate hike. But the report that came from US also spiked confidence on Friday. But I will tell you, the fear of weaker banking sector or banking industry is also hitting that domain, and that's why you are seeing what you are seeing this mistrend in the banking industry. The mistrend in the banking industry is because of what the regional banks in US are shaking already, and that has sent the fear for investors in that domain. On that note, they are all kind of trying to balance their portfolio. Some big names in the investment world like Warren Buffett, most of them are scaling down their position in the banking stock. You can see the oscillation in that market. But when the job report came, it gave a kind of a stronger number, better than expected. But that also have sent another fear to the market, because if Fed have said they are slowing down in interest rate, they are more likely to start normalization. But on the positive job result, that might be an energy or impetus to even push the Fed to continue to work to high rate. But as a attention or focus is now moving forward toward the expectation of US consumer price index for the month of May, April, and that of also China. You can see that the two large economy in the world were expecting to see their GDP, their consumer price index data for the month of April. That will also give insight what will happen in US if inflation continue to go down. Would they go ahead to start reducing their interest rate? Because actually for the month of March, we saw there was already a slowdown in inflation, but still far from the 2% projection or kind of estimate that the Fed is also looking to achieve. But I believe that this also, that's why the volatility we are seeing, or the mis-sentiment we are seeing, is a result of all this playing out. And also in China, knowing that yes, in the last golden holiday, we saw that there was increase in trade, and also this is also expected to fuel that data for that month. But because also the since post COVID-19 restriction was lifted in China, we can see that the manufacturing sector of that economy has been weak, because as a result of if you look at the April purchasing margin index for China, it's still below the 50. I could tell you that it's also struggling, and these are the missed factors that is driving what the whole sentiment across the globe in different market of the world, or in different instruments. If you also look at what is happening in the oil market, yes, the oil market, the people are assuming that if China economy continues to work, because of high demand from China, it's going to support what the price. But as to speak, oil has stably rebounded to around the 75 35.78 as we speak now this hour, which is also good. But I'll tell you, all these are still oscillating, are still in a shaking ground. Why? Because the escalating geopolitical tension or conflict in Russia and Ukraine is not helping matter, as most of the big economy are more interested in what in selling their arms and not looking at how to bring peace to the world so that global economy can find direction. Don't forget that the global economy has experienced a kind of a slowdown because of COVID-19. That after that, Ukraine and Russia war came that have lingered for more than a year. These are the things that is affecting the market globally. But I believe that investors in this different domain are using different strategies to trade, and that is why here in Nigeria, our eyes should not move away from our chart. Why all those mature market, they all look at their chart to see the sentiment of the people, which sector and industry. I mentioned earlier that the big names investment like we're going, knowing that the banking sector is the most active sector, even there because of their consistency. See, it's clearly that is why you as a trader and investor, you should know where you should put your ten and why. But if you look at the three factors that are affecting US market, which I know is also affecting many economy of this world, are three major things. One of these factors that are affecting China US market as we speak now, for me, is thing that is also happening around many economy as we speak now. And this as a result of what? One is the banking crisis in that environment, developing a kind of we have seen this regional banks having some risk impact, and that's also kind of giving some fear to some investors. To mean that this banking crisis also is not helping the economy. That's why this the banking crisis, and another one that is so obvious again is the inflation crisis, which have led for more than a year rate hike Fed, and that also have slowed down the economy in that environment. And also market is waiting to see if there's a break even from this interest rate and see a reasonable recovery that also that will kind of push or strengthen optimistic about the economy. You can see that the interest rate has not helped the economy. At the same time, it has not helped what the banking sector. You can see that what kind of issue springing up in that environment, because this is the state or the country that started this almost more than 1 year rate hike has stretched. This aggressive rate hike for me is not helping the America, and that is also a point times where America is at the point of either break or make. We did this three major factors. One is the debt ceiling crisis. I also mentioned what the U.S. sovereign credit default swap. These are the things that are concerned. Investors are concerned, and these are also shaping the market. Like you see the market up today, you see the market down today. But if you look at what I mentioned earlier, that in Asia market, we saw that all the indicators are green. I mentioned that Japan was in red, and few others. It tells that market is also stabilizing, extending the kind of positive pattern they saw in the on the US market on Friday as a result of what the positive job report. But as all eyes are shifting to this in the US and China, US and China inflation data to see what is happening there. That also have a way also to see where the market is going at the end of the day. That means for you as a trader, know that all this are happening across the globe as a way of influencing what our market here. That's why we need to look at them and see how are they going to help the market. If the kind of crisis there, are we expecting that funds to start leaving matured market now to emerging market where Nigeria belongs? Are we putting policy down here right for us to say, oh, our policy here, our move here will attract funds to our country? But don't forget that our market have suffered the exit of foreign investors. Not that it's a negative thing for us. We see that as a plus because our market have been stable because of local players. But I tell you that if they're having crisis there, their banks are shaking and they want to look outside their domain, which country are going to look, in Africa, emerging market? Is Nigeria one of them? I can tell you that our country is maybe one of them. Why I say so? Because what we see stability in our banking sector, and our banking are not exposed to technology setup, which they are banking there. You can see most of the regional banks and the Valley Silver Capital that also is because of the nature of their business. But our banks here are healthy, which data and also the regulator has confirmed is a good one. But now that also that we are already in the month and also less than 2 weeks to see the handover that will come over. We have the incoming government. I expect them to build confidence if they can put the right people in the right office, and at the same time statement that will come from them. I believe that this also will boost confidence and that will support our economy also, because we expect that the people, the statement that will come from them and the appointment that they will do at the initial time and the next 100 days or more than that will also give direction where our market will be going here, because also the economy. I believe that for this income administration to make more impact on the economy, we want to look at what the interest rate, so that the economy will not be stifled by high rate, especially as we are seeing MPC meeting coming. Also before the handover, I believe that we expect to see that an MPC meeting that is coming being the last for this administration. Yes, we don't know how far the CBN governor is going to work with the new administration before his tenure will expire or don't know what will happen. But I believe that this will be then on the next MPC meeting will be in the new administration. Who will be the CPM manager? Is it the incumbent one? As it, these are the things that I want to put. I believe that from data that are coming, as well as are also in on inflation and the Q1 GDP figure, to guide the MPC meeting, their next meeting, whether to hike rate or to keep it flat. But I believe that from all groups of things, since we have seen that the April policy margin index turning a positive, for April for me, and at the same time also looking at inflation that was expecting. If there's a kind of slowdown, we might see that if, they might MPC might leave the interest rate flat or marginal, either 25%, not going round of 50 basis points again. These are the things we expect to, but I believe that it's also a step for investors to watch, because earnings that came from the market are also giving us insight that the GDP figure we're expecting might not be as bad as forecasted earlier by many analysts and investors, because companies results are giving us an insight how our GDP should look like. Because if many companies have performed what they did in 2022 in this period that have had a cash crunch and all the stuff, it tells you or point to us that they are likely to see what a slight growth in our GDP if that is continued, because in this second quarter we might see gradual recovery. But I believe that going to high rate is not the best option at this time. But the good thing is that the momentum in the market remains strong, as investors are looking towards the companies with posting that are posting a positive Q1 number to start the current financial year, and those that posted their full year result that their markdown date was seeing no payment date, was seeing also this payment date providing more liquidity in the market for investors having access to their cash, dividend cash from the payment to invest more in the market. Also institutional investor, these are the factors that are driving the market. As we speak now, the market still remain in green, extending the recovery that we saw in the month of in the last about 7 days, in the last week of April, for me, is a good thing for the market. There's no cause for us to panic in our market, because these are showing that momentum, and then we're seeing more buying position than selling position in the market. Tells that the buyers are in charge in the market. For that, every investor in the market should just exercise patience and also invest with information. It's not time for you to invest to go and sleep. You want to see where the market is going, because we're seeing positive trend coming out. And like I said in one of the class, is it the time for say sell in May or also buy in October? But I said it that there's different situation, different environment, different things that happen with this period. And also if you look at data I've reviewed here again last week, that for almost 24 years we have seen that sell in May did not work in Nigeria for good 15 years for cost of 15 times, and other we saw that after 2 years we saw first sell in May. But I believe that sell in May or that mantra does not work perfectly here, because our market have defied the sell in May in many times because of what? Because of the environment where we are. In the mature market, because of their summer, they want to sell and go and rest and come back after the early and all those stuff. But that does not work much here in our market because of what? Because of our pattern of the market. As far as investors are concerned, these are the factors that drive market. The earnings, and these positive earnings as they remain in the market, people will be interested to see where they are going. And like I said earlier in this class again last week, that the simple way to get your buy signal anywhere in the world is that when you see that the company earnings on the exchange or anywhere you are trading are starting on a good note, with a better number compared to the previous year. Like we said, we have seen a better than expected numbers in this 2023 Q1. It gives you a sign that if this trend is continue, whether price move immediately at their release number, or subsequently the one that will come if the trend is sustained. We saw what happened in April because of what people took profit after their position early in December, in January for dividend. Once they got to there, they start taking dividend, they start selling and taking their profit. But as people are seeing that when earnings are also improving, When they see that this trend is sustained in Q2, you see more, more players come to the market ahead of what, ahead of also that last quarter and also December. For me, there's no cause for alarm. Our market remains very, very strong, and that also will keep investors to be focused in some sectors and industries where we expected to see what that the positive earnings is being sustained. Like I mentioned earlier, that in US we saw a mixed market. The Asian market was more of a green market than those few indicators in that market were in red. Most of them are in green. In Africa, we saw that the market is also mixed, and in Europe, because of fear of what, of no, the rate hike that was hiked last week by ECB, which is the central bank, European Central Bank, and also fear of recession in Germany. There's also a mixed market in that domain. But I believe that no, if US can come out for this, there are three make or break crisis that's impacting in that domain. Talking about bank crisis, talking of inflation, and also debt ceiling, which also, if you come back to Nigeria, almost the same thing we're battling here. Here in Nigeria, we're also seeing that the debt profile in Nigeria has also gone, haywire, almost 73 to 74 trillion. Also, we're seeing that inflation is not helping matter. The only issue that we are not having now is that our banks are heavy. But I tell you that the economy is still dragging feet. But I believe that we are better than them because we have not seen any bank. But I believe that for our inflation rate, our high interest rate, it's also a problem, and also the 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 debt profile that we're having. But I believe that now that outgoing government has make sure that the last means and way issue was have been sorted out to give a clear direction to operation, that has incoming government will come and manage it. But the good thing that the banking sector, who is any of any economy, is heading in our domain. For me, it's a plus for us. That is why you can see that last week we have seen more activities in the banking sector after they marked down. Most of them they rebounded powerfully as a lot of what the positive earnings that can also the high interest rate have also impacted their performance, which has not abated, which has not start coming down. That is likely also to impact positively on their work, on their Q2. Investors already seeing it, and that's why they are pushing. And also the number of the traffic that have gone to us to online banking because of the cash flow issue also is a plus for the bank. And these banks are also going into a holding structure that will further boost their earnings, especially for those that are already in the shareholding the holding structure. But those that are coming in my experience a little slow down their earnings, but we are seeing that it's becoming a good thing for them because most of them bottom line have remained strong, on the strength of this holding company. That is what is playing out in the market. It's good that we look at the sector that I just mentioned now, the banking sector. The result that came from that banking sector as at let's say that last week altogether, we have seen that most of the Q1 for that industry have hit the market. Only during the weekend we saw FBN Holding and Unity Bank notifying that their Q1 result will be made available or not before what, May 30th. That means you can see that you won't see the FBN Holding either audited or Q1 anywhere for now, and that of Unity Bank. But for other banks that have released their 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 Q1, it's good that we mention what investors should look at because it will go a long way to determine how far these companies will go and what is likely to be what their full year earnings if this trend is sustained, and if there is a kind of a better performance, that means the earnings that was projecting might be higher, and that will support a higher payout. And in the history of Nigeria market, the most consistent industry in terms of dividend payment have been the banking sector, and that is why when there's anything happening in the banking sector, people market shake because of what the kind of exposure and the kind of weight it has on the market. Despite that, the five major high cap stuff like Airtel Africa, MTN, Dangote, Cement, Boa Cement, and Boa Food are the major five high capital that when they move. But I'll tell you that this banking sector, when they shake, you see that it affect the market because these big names they only take the market up or one coming down. But in terms of stability, banking sector is favorable because they are the most regulated sector in the market anywhere in the world. That's why as they are rebounding powerfully, you can see that market is feeling the impact. That even when most of the high cap stocks are experiencing some sell off or profit taking, market still maintain this positive trend. Even we're not seeing more gain in the index. But I'll tell you that we're seeing more buyers, which are also shown in a positive market grade for the week, for the week and for the day. It tells you that people are taking more position. For me, there's no cause for alarm as to speak. Yet, as I said earlier, that I want to mention most of the banks that have released their result and what their EPS look at. for the banking sector, and what is likely to be their full year on the strength of this Q1, because you need to focus on the strength of Q1. When you look at their P ratio is for the first quarter. P ratio will be lower when we have seen most people do P ratio for 12 months, but we in Investdata we do P ratio for Q1, we do for Q2, we do for Q2, so that it will guide you. That if you look at the P ratio of most of these banks with their current price, it might, for me, is still very, very much attractive, because they are far, far below the 12 times of the general market price to earning ratio. Because if you look at the life of UBA P ratio, even at the current price of at the current price of 8 naira, what is the price that close today? You can see that the P ratio is around 5%. Then it tells you that this is on the strength of what the 1 naira 57 earning per share for Q1. It's not a full. You can see if you project this one on this strength of 1 naira 57 kobo, you can see that nothing less than 5 to 6 naira earning per share for the full year. You can see if this attained and the price move, this also guide you as an investor. Also, if you did life of Access Bank on the strength of their 2 naira 2 kobo earning per share, you can see that their P ratio also as at the price was there. This at the price of price was 9 at a release date. So let me put that at a release date of this number. That's about 9.9. That's to give you around 4.91. You can see no times. Then also you can see in all these, I'll tell you that this P ratio are still in order because they are first quarter. When you forecast, it can also reduce it for you to become what you can see want to be at more the attractive one. But if you really want to know the cheap stock here to look at, you go straight to see what is the price to book ratio of this bank is going to tell you whether they are cheap or not. Looking at also the high margin of safety, looking at the book value per share of this company and what they are currently selling in the market, you can see that this high margin of safety will also guide you as an investor on what to do, as regard to what to this bank. For me, it's a good one. If you look at what is happening for UBA now to speak, than the price to earnings for most of the banks, I will tell you, to show that how our banks are grossly undervalued. Price to book of this bank are below 1 naira. It tells you that these banks are very, 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 very cheap at this point. The only banks that have the only two banks that are at 1 naira 1 point in terms of a price to book ratio are one is a no is a Stanbic IBTC, and the second one I'm coming. The second one is the Jahis Bank. These are the only two banks that have a price to book value. They tell you that others are below. They tell you that they are very cheap, and if your margin of safety is high because their book value is high above what is selling in the market. For me, these are the things that should interest us to keep our focus in the bank. And those banks also that have dividend dividend policy. What are you doing at this point with those banks? We're already in the month of May. Before we know it off, May is off, we'll be looking to see this banking results as from the month of July. You can see how, as an investor, what we should do at this point instead of you panicking. But I believe that the earnings that came from the bank sector are very impressive. As we speak now, most of these earnings in the bank, they all meet Investdata criteria for you to pick out the healthy and undervalued companies that must have 50% above what at 20% and above in terms of their gross earnings. The same thing of also their PAT, and why their profit margin must be above what 10% and above. And we see that most of these banks they have that 10% above, which tells you that our banks are really very well managed in terms of the profit margin. I mean, risk management in the bank in Nigeria has really improved, and I know why they should, because they've experienced a sort of high non-performing loan, and they need to also improve or tighten their risk management, which also have reflected on their exposure, and also most of them are having a non-performing loan below the CBN stretch mark, which is around 5%. That says that these banks are well run. But if you look at the banks profit margin, they are all good. If you look at them, for me, it's a good one. If you look at it for them, investors don't need to panic in this direction. But quick one, because of our time, we quickly look at what the market is doing, and now look at the chart to also round up the class for today. At this hour, I want to look at what is the market doing at this moment. As at the time we started the class, market was up. That was 12 dots. The market is in green, and that was the extension of on how it started in the morning. Continue to get there because we are seeing more buyer in the market, I tell you that something is interesting in this market. Most of the stocks that were marked down recently have rebounded, and also liquidity coming as a result of dividend payment. We're expecting to see some payment also coming from banks, some banks this week, and also some other company that also provide more liquidity for this market. Don't forget that the week of April, we saw bond maturity from that fixed income market. That also provide more liquidity for the financial market generally. As we speak now, the market is doing 52,513.575. Market is up by 48.44 basic points, representing represent no 0.13. I see that market is in green. For me, it's a good one. I'm having a positive market bet of 11 advancer, of 17 advancer, and 14 decliner. Still in the green as we speak. For me, this is a good one for the market. There's no cause for alarm in the market as we speak. Investors that are here are taking advantage of the opportunity the market is also presenting. Why like I tell you in this class, and I believe most of you and another class are taking advantage of this, that you don't fall in love in the stock market. You can see that stock will rally for some days, so that market has already taken profit as we speak. If you look at the top losers on the loser side of the market now, I told you that we have a 14 market in red, while 17 are in green. On the top loser chart, we are seeing that the Adover is one leading there with almost 10% down, trading around the 17.50 naira. We're seeing a Transcorp follow that trend to trade around the 179 kobo, followed by Champion Brewery. You can see that MC Nico is there, and the international energy, international insurance, and international energy insurance. These are the 5 top users as to speak. But if you go on the flip side, the gainer start, we're seeing that the match account are the one leading now, especially Restart, seeing that Restart has gained 10% flat, followed by Cavaton, and you can see also Cornerstone Insurance on that gainer start. You can see ABC Transport and UPDC. UPD is up almost 5.6% in the green. You can see this is the market situation. But in terms of volume, which is very, very key, as we trade, which are going back to the chart, we can see that the Access Bank is leading, Access Group, sorry, not bank, Access Group Corp is leading by 111.8 million shares, trading around 11 naira 50 kobo already at this point. You can see volume is also coming out. You can see this volume has been there since Access announced 1 naira 30 kobo dividend. We're also seeing that UBA have hit the 8 naira once again to trade up almost 40.4 million shares to be the second in terms of activities volume traded so far. Transcorp is not left behind, but seen at 11.5 million shares. Now they can be followed by Sovereign Trust Insurance, 10 million share traded so far, and Onwando at 5 naira 50 kobo, 7.2 million share traded. This is the state of the market. Quick one, we are coming back to see what is happening in the market, looking at our chart. Our chart is telling us that market, if you look at here, market is extending a positive trend that that it closed on Friday, and also for the week, which is a good one. Last week we saw a 2 days pullback and also a 2 days the retracement, which we are seeing the market trying to break out another strong resistance level of here around. You can see where my cursor is now. Once market will break this out now, good that market is trading above the T line. I want to call our indicators up now for the chart. Let's look at what is happening in the chart now. Let's look at the chart. For me, it's already looking good. Tell you where the market is heading. There's no cause for alarm at all. We have to call our money flow index to see what it's doing now. Call our 8 days exponential, our T line. Don't joke with that in this class. If our blue line is up there, then we'll call for our ADS. ADS will tell us what is happening at this point. It's good to know all this so that it will help you to make decision at the right time. Yes. I don't want to crowd the chart with indicators. These are the few ones I know that are necessary, and the ones also you understand better, you can use them. But these are the ones we use here in this class, and also that guided us to make to make money and also to make informed decision. Yes, you can look at the chart here now. I always tell you that I do last time that when you see the market trading above the T line, it tells you that there is momentum in the market. You can see already market, towards the end of April across the T line, it maintained even when it pulled back. And that's why I said this pullback, we'll call it I tell you that I don't call retracement in a market, and also different between or reversal. The retracement is different for reversal. As of what we saw for that today was retracement, but now market has maintained that uptrend. Say that there is also big opportunity for the market to go up, depending on what will happen during the handover and outcome of MPC meeting, as well as the fixed on GDP for the first quarter, and also the April consumer price index. For market maintenance, uptrend for me is a good one. But if you come down here and look at that volume, it's relatively small this morning, but we're seeing that for all this while volume have been above the T, like you can see it here, above the average, sorry, this black line here, you can see. But today, consider it's now trading below it. Let's see how it goes to close today. But from what we're seeing, only assets is having about 111, others are below that. That we might not see that good volume, unless it's just still afternoon, still midday. Once before the day market closed at 2:30, you might also see more. But let's wait across our fingers. But you can see that technically market is very, very strong. And also, like I said, liquidity in the market is not bad. Money flow is also reading around 73 point, which is good for a daily chart. And you can see here your ADS, which I told you earlier, when the market was coming down, you can see that the red was coming up powerfully. But now that market is coming up, you can see also that the blue is also trying to, once able to cross also this red one up, that also confirmed. You can see when the market was up here, I see that the blue was there and ADS was high with this right there. And now that ADS is also, for me, it's also not looking bad, still above 20, which is also good for ADS. It's above 20, it's a good one. But once they're able to cross each other, this blue and cross up, will perform a stronger momentum that uptrend has really started in the NS that was to go to wait and watch. But the market at this point is not doing badly, and this is the fourth trading day of the week. I believe that this is a full, the second full trading week up, because last week we saw a short trading week for only four trading days. But we expect to see the full 5 trading weeks where I let all I see what will happen. We expect some profit taking some stocks, while accumulation also is going in some stocks. We have seen that the volume reflect that some investors are interested in some stock with the volume we are seeing, and that will also continue in some stock and some industry until see the end of the month. But these are the good things. But let's really look at other indicators, other time frame to look at. Let's look at 1 hour, how the market is looking, general market. On 1 hour, still above the T line. Market is almost, money flow is almost reading. And you can see on the 1 hour chart, the market is already above the T line. You can see the blue line where it is above the red one, and money flow is there. That is good one for me, and it's a good one for the general market. Look at 15-minute chart. 15-minute chart will also tell you that money flow and the market, if you can see what it's saying, the blue line, for me, there's momentum in the market, there's no cause for alarm. Yeah, because of that, look at two stocks to look at quickly is the momentum in assets, looking down, because assets has tomorrow as a qualification day. Let's look at what is happening in assets. Quick one before our time. What is happening in assets? Let's look at that. Look at after that. Look at what is happening in Carbaton of UPDC to see. You can see assets. This 15-minute chart very, very strong. Despite that activities of profit takers here and there. In the last day you can see up and down. You can see red and green. But good enough, money flow is still very strong, above around above 90. And you can see that the momentum is still here. But profit taking activity is already, we're seeing a sign here in the stock, which is expected after the stock have lagging for many days and the profit taking. And also, if you look at the Access Bank here now, you can see the chart formation on the daily chart. You can see for yourself what we are looking at here. You maintain that to trade around almost around there, 11 and 50 money flow is still coming up. Once it close break out to 50, that will say yes, more fun. After that, it's still looking up sharp. And if you look at the ADS is telling us that there's strong momentum, and I can see it here. I agree with it. Even when it break out, you saw what there's what we call a retracement and what and a reversal. When you see retracement, it won't cross the T line, but it tested it and continue to up. That is for this retracement. And you as an investor should understand how to do your retracement and your reversal so that you won't jump out of the market, fearfully, or when things are not happening because you are afraid after jumping out of the market to start making an uptrend. can see what has happened in access. For me, there's no cause for alarm. Let's look at the 1 hour chart for access. I think I've done that. 1 hour chart, I can see that in the last how many hours it has maintained a green curve, which is good. Since market has opened, access has maintained that good position. You can see that money flow in access on a 1 hour chart is above 50, which is a good sign. For me, it's a good sign for access. Let's quickly look at UPDC before we round up the class. For others that that understand technically, once the market close for end of the day, you can also come and chat and see what is happening and can ask questions when necessary. UPDC is what we are looking to round up the class. You can see a sharp on a 1 hour chart. You can see a sharp green, and that sharp green is still there. But money flow is coming up to be there just 41 minutes, 41, and there's a strong crossover with what I tell your ADS, which is good for the stock. For this on what on a 1 hour, if you check out the daily chart, what is happening on the daily chart, there is something happening in UPDC. You can see on the daily chart, you can see that there's still momentum all this while for a long time. The stock has moved away from a bearish or a negative sentiment to positive one. But like ADS is very strong around the 28. For me, it's a good one on a daily chart. I think that the stock is going somewhere. On the money flow in the daily chart, once it cross 50, that will also be a strong thing for the stock. But to speak now, it's been above the thing that you can see. Once able to break out the recent resistance here, these 2 points here, and that will usher the stock also. Once the Q2 result with the market and it's positive, that will be more. But as we speak now, the stock is still forming a kind of a saucer, chart pattern. You need to watch it or something come with it at the end of the day. On this note, I will say thank you for your time, and also we look forward to see you tomorrow. Enjoy the rest of your trading day. Bye.